Experienced business people are used to dealing with risk and with change, but even the most experienced business people will find it remarkable over the last 15 or 20 years or so, the level of risk and the rapidity of change in today's business. Events like the 2008 banking crisis, the oil price collapse in 2015, all of these are significant risk events, and the rate at which business changes is breathtaking by comparison to the 1980s and 1990s. The tools we use in business to plan and to forecast and to manage business, those tools we used in traditional businesses are far from being adequate in this modern world in which we're competing to survive and flourish and win against our competitors. The financial analysis, modeling and forecasting course that we run at Glomacs is specifically focused on dealing with these 21st century challenges. And I'd like to tell you a bit today in this short video about what it is that we cover in this leading edge business course. In the first session of the course, we're dealing with the nature of the 21st century challenge and looking at using modern approaches to building financial models. And the course is very much a practical course focusing on using Excel and making the most of the very powerful features built into Excel. And on the first day of the course, we'll explore how we can use Excel and look at the best practice principles for building financial models. On the second day of the course, we look at using the power of Excel to make us more productive in carrying out financial analysis and using financial ratios to give us greater insights into financial performance and financial strength of the business. And the advantage of using Excel in this application is it takes all of the hard work out of calculating the ratios and gives us much more time to focus on what the important changes in the numbers mean and what the ratios tell us about areas of relative performance and how we can focus on those to improve business performance. We move on in the third day to look at using Excel to build powerful financial models for forecasting. We look at applying Excel tools for sales forecasting and using the built-in statistical analysis tools for predictive analysis and identifying trends and variations in historical data and using that, if relevant, as the basis of making useful forecasts. We look at the other statistical tools as a means of understanding cost behavior in our organizations and identifying causal links between different variables to give us a more accurate approach to forecasting costs for planning purposes and budgeting. We also look at some of the most common problems in forecasting and look at some of the most recent research in the weaknesses in the forecasting that many companies produce and look at ways we can deal with that. On the fourth day, we look at an area that for many companies, particularly in the Gulf region, like oil and gas companies and petrochemical companies, that is a vital aspect of their competitiveness and their survival, and at the same time places severe demands on their ability to generate cash. And that's specifically the area of capital investment decision making, where very significant amounts of capital have to be invested to maintain competitiveness and productivity. And we'll look in that part of the course at the very powerful discounted cash flow tools that are built into Excel. And we look on the course at how we can develop models, cash flow based models, that give us a greater insight into the sensitivity of various kinds of capital projects to changes in commodity prices and changes in other significant economic factors. And applying the same principles, we look at a cash flow based approach to business valuations that's critical in merger and acquisition activity. On the final day of the course, we pull all of this together and look at the different types of risk that face us in business and how we can identify them, how we can manage them, and most importantly, the best tools we can use in financial modeling to help us apply sensitivity analysis to our forecasts to see what the potential impact is of these various kinds of risk events on the business. It's a very interesting course and highly relevant to the 21st century when we face such levels of risk and rapid change.